I told the world that I was a real estate mogul worth $65 million, but I ended up going bankrupt.
This is Pocket Watching with JT.
Hey, Pocket Watchers, I am certified financial planner Jayson Thornton, and this is the Bankruptcy Breakdown. This is where I react to the financial failures of your favorite celebrities and online influencers so you can get the financial lesson without going through the trouble. Let's go, Pocket Watching. On this episode, I will be reacting to the bankruptcy of Caesar Pena, but he's better known online as Flipping NJ. That's Flipping New Jersey, a man who claimed to be a multi-millionaire real estate mogul. But the question we should ask is, why do we even know who he is? Why is this man famous? Because I personally have many clients who are millionaires in real estate, but I don't see them with, hundreds of thousands of Instagram followers. So how does he hit the radar? Well, somehow, some way, he found himself on the Breakfast Club morning radio program. Yes, we're talking about Charlamagne the God, DJ Envious, and at that time, Angela Yee. And apparently, based on the story that was provided, Caesar Pena somehow, some way linked up with DJ Envious. Now, if you are unaware, DJ Envy is a man of many talents. He does not simply spin records. He has many talents. One of those talents are supposed to be he's a real estate expert. He's an expert in investing in real estate, making money in the real estate game. And I suppose it was love at first sight when he met with Caesar Pena, because not only was Caesar able to broadcast on their national platform that he was a man that was a felon. Now, you should be asking, what was he a felon for? What type of felony was he charged with? Well, during the interview, he wanted to reassure the public that while he was a former drug dealer, he was not a felon based on selling drugs. No. He was a felon because of fraud. Not selling drugs. No, even though he was a self-admitted drug dealer, he didn't go to jail or prison because of drugs. No. He went to prison because of fraud. So he was able to tell this story, rags to riches, of being a convicted felon for fraud and then becoming a multi-millionaire real estate mogul. So not only was he blessed with the opportunity to share this story with a very large black and brown audience, DJ Envious decided to partner up with this man to host real estate seminars. Now, I know what you're thinking. You're probably thinking that DJ Envy and Caesar decided to partner up to squeeze the pennies out of the audience so that they could sell their knowledge, right? Sell their knowledge to the people. You would be wrong. No, they linked up not for a for-profit purpose. They linked up for charity's sake. They wanted to share the knowledge of how you could rub your pennies together and become a multi-millionaire real estate mogul like these two gentlemen are. And they wanted to share this information at the lowest cost possible. So they went around the country hosting these seminars so that the black and brown community can find themselves getting out of poverty and comfortably into the upper middle class of America. Sounds like a great story. Not only was he blessed to be on the Breakfast Club, but Caesar Pena also was able to find himself on the biggest black and urban finance podcast known to all mankind, the Earn Your Leisure podcast. I believe it was episode 33. And this is the title of the article on the website where they try to attempt to give you some understanding of who this man is. Here's the headline. Real estate mogul left jail with no money and a felony. Remember, that felony was for fraud. And a felony. 13 years later, he has a net worth of over $65 million. Well, man, that has to be impressive. Has to be impressive. And you know it's got to be true because of the very good men and women over there at Earn Your Leisure. They do a great job at doing background checks and investigating the individuals who they present to the public. So clearly, this man has to be who they say he is, a real estate mogul worth over $65 million. So how do we end up here? How do we end up with a news report with DJ Envy, Caesar Pena, and Caesar Pena's wife claiming that this may be a real estate ripoff? Well, according to the federal government, they said that Caesar Pena was a New Jersey real estate investor and online influencer who was charged with committing a multi-million-dollar investment fraud. All right, says he was laundering drug proceeds and bribing a New Jersey politician. Oh my God. All right. So here we go. Let's dig into the numbers. Let's go pocket watching with this bankruptcy. Now, Pena's empire was revealed to be a multi-million-dollar Ponzi-like investment fraud scheme. And in October 2023, he was arrested and charged with wire fraud, money laundering, and bribery. So what was Caesar's reaction? What was his response to being arrested in October of 2023? Well, financially, his reaction was on January the 8th, 2025, he filed for Chapter 11 bankruptcy. Now, I have to remind you guys, there are different types of bankruptcy. Now, Chapter 7 bankruptcy is the total liquidation bankruptcy. It's when you try to walk away from your debts. Chapter 13 is the payment plan type of bankruptcy for individuals, while Chapter 11 is the payment plan type of bankruptcy, usually for a business. But Caesar Pena, as an individual, he decided, hey, I'm going to file for Chapter 11 bankruptcy because most of these debts are business related. I guess it's just in his personal name. Here's the issue. Eventually, after the bankruptcy court looked into what the heck was going on, they decided to change his Chapter 11 bankruptcy, the payment plan bankruptcy, into Chapter 7 bankruptcy, the total liquidation. And we'll get into why that happened a little later. Let's go into these numbers, the financial report. What was his income? Well, based on the Chapter 11 bankruptcy that Caesar filed, he did not give an exact number of what his monthly income was or what his annual income was, but he did say, hey, his income came from his real estate entities and the seminars. Remember, the seminars he was doing with DJ Envy he was making money off those seminars according to the bankruptcy. Now, what's the problem? The problem is when the trustee did his investigation, he found that Caesar Pena was commingling investor funds with his personal money. He was using new money to pay old investors and pay himself. That seems to be a problem. Well, what about his expenses? Well, he was living a very high-profile lifestyle. One of the expenses that he reported was that he had a $2,075 monthly payment for his 2021 Cadillac Escalade. I'm a little confused why the Cadillac Escalade was a business vehicle. I doubt he was showing up to Home Depot and getting drywall in the Escalade, but hey, go ahead and follow the fake gurus online, and I'm sure you'll get that tax deduction. All right. But he was spending a lot of this money personally with unauthorized transactions. Once again, you have to keep the business and your personal life separate. Let's take a look at the assets that were claimed in this bankruptcy. Remember, there's a difference between an appreciating asset and a depreciating asset. Appreciating assets are the things that go up in value after you buy them, while depreciating assets are the things that go down in value after you buy them. Well, he claimed that he owned a property in Maplewood, New Jersey. Didn't really claim how much that was worth, but he claimed that he owned that property. He also claimed that he had business interests in a company called From Start to Flipping LLC, which he claimed was worth $750,000. Well, what about the Escalade? Well, he didn't have just one Cadillac. He had two Cadillacs listed. He had a 2021 Cadillac CT4 and a 2021 Cadillac Escalade. The problem is both of those vehicles were leased. He didn't own them, and they were subject to repossession. What else did he have? Well, he had a basketball signed by Michael Jeffrey Jordan, which he claimed was worth $5,000. Good luck getting that price. But one of the things I want you to notice, which happens to be a trend in these bankruptcy breakdowns, what did he not have? Well, he did not have, at least listed, any traditional investments like stocks, bonds, mutual funds, the traditional things that you would expect a multimillionaire to have. To be honest, these are the things that any middle class or lower middle class person should have as they slowly try to build their wealth. If you have the option to invest in a 401k at your job and they're offering you a match on a percentage of what you put in, you should be doing this. If you do not have an option for a 401k on your job, it's okay. You can open up an IRA, an individual retirement account, and you can start putting money away for your retirement so you don't end up like Caesar Pena. Now, what about the debt? Well, according to the bankruptcy, Caesar Pena owed anywhere between $1 million and $1 to $10 million. Wasn't really specific, but we were able to find out that two entities that he was related to, one being Wirehouse and the other Taylor Court, they had judgments or claims against them in the amount of around $26 million. Yeah, that seems to be a problem. And apparently he was behind on the payments for those Cadillacs. He was behind $91,000 for the Escalade alone. That is a problem. Now, when you go to bankruptcy court and you're asking for relief, it doesn't matter if you file for Chapter 7, Chapter 13, or Chapter 11. If you're going to the bankruptcy court and you are asking and seeking, pleading for relief, understand that you don't get to do that in a vacuum. The people who you owe money to, your creditors, have an opportunity to have a meeting to investigate what's going on and to make sure that you do not take advantage of the bankruptcy code and law and hurt the people who you owe money to. This is referred to as a Section 341 meeting. And at this meeting, they have an opportunity to take a look at your financial records and see what's going on. They're able to do an investigation to see if you're hiding anything from the court. And apparently, people showed up and they showed out. At this meeting, they claimed that said, hey, Mr. Pena should not be allowed to walk away from this debt or even set up a payment plan to get back in good standing with us, because a lot of the debt that he's claiming, right, the debt that he owes is coming from actual fraud, willful and malicious injury. See, the bankruptcy code is not designed for a person to commit fraud, owe people a lot of money based on these willful and malicious acts, and then the court then wipes away the debt. That's not how this works. So these companies, we have On-Site Properties LLC. They claimed that Caesar Pena owed them $300,000. Why? Because they invested money with this man, and because he was promising them 30 to 35% return on their money in a 5-month period. That's a red flag by itself. 30 to 35% is what you were going to earn on $300,000 in just 5 months. Okay. What about Amy Flips LLC? They claim that they're owed $500,000 and they were promised a 20% return on their capital, and apparently they did not get it. There was also Ransom Endeavors Incorporated. They claimed that they were owed $200,000. They were promised as well. They were promised a 30% return on their capital. And the trustee himself, who the trustee was not owed any money, but the trustee also spoke up and said, listen, we don't believe that Mr. Pena should be discharged of this debt because he has failed to produce the financial records we have been asking for, or explain why he has this lack of assets. So what ended up happening? Well, apparently the court said, you know what? You people are correct. Something's wrong with this bankruptcy and we don't like it. And on June the 17th, 2025, the judge ordered that the Chapter 11 bankruptcy that Pena voluntarily entered into, they forced him into Chapter 7. That means that all of the assets that we believe that Caesar Pena was trying to protect by filing this bankruptcy is now up for grabs. Now, the bankruptcy court, by the trustee, can take control of these assets, sell them off, and try to pay off the people who he owes. Now, on October the 15th, subpoenas went out for Mr. Pena to provide the information that the trustee wanted. They wanted to look at the books, see where all of this money went. Where's the assets? The problem is Pena kept asking for more time. He needed extensions. He needed more time to get the books together. And on December 30th, 2025, the trustee reported that zero, that means nothing, people, zero documents were produced. That is a problem for Mr. Pena. Also, apparently on the same day, December 30th, 2025, the trustee filed an adversarial proceeding to deny Caesar Pena the discharge he was looking for. So what does this mean? This means that, usually the point of bankruptcy is to have your debts wiped clean. The trustee is asking for the judge to make sure that Pena debts never go away without him being forced to try to pay off as much of the debt as possible with all of the assets that he was able to gain through this scheme. So what did he claim? This is the trustee. Well, the trustee claimed that Mr. Pena was hiding assets. He was hiding money in his wife's name or within a maze of LLCs that he put together. He also claimed that records were being falsified, and he was failing to keep adequate books. And he also reiterated that the man was running a Ponzi scheme. Okay? So what does that mean? That means that the automatic stay that went into effect when the bankruptcy was filed now goes away. Well, what do you mean automatic stay? What does that mean, JT? Well, one of the advantages when you file a bankruptcy is that people who are aggressively trying to collect what is owed and you are afraid that they will foreclose on your home or they may repossess your car, when you file for bankruptcy, there is usually an automatic stay. That means a hold on the collection activity, right? No longer are you under the immediate threat of a foreclosure or the immediate threat of repossession. They all have to wait and get in line and go to bankruptcy court and let's figure this thing out. So that means that now people can come after the things that Mr. Caesar Pena was doing the best he could to avoid. So what are we learning right now? Well, we're learning that in some of these bankruptcy breakdowns, some of you guys in the comments, you say that, hey, we think these celebrities and influencers, they're lying. They are finessing the court. Well, as you can see with Caesar Pena, that is not as easy as some of you may think. The bankruptcy court does have mechanisms in place to catch a person when they lie about the assets that they own or the assets that they do not own. And they have mechanisms in place to protect the creditors, to protect the people who you owe money to ensure that they are not ripped off. Now, you should be asking yourself, well, JT, how can I avoid ending up in the same situation as Caesar Pena? Well, number one, don't commit fraud. Don't be a scammer. That will help a lot in this situation. But you can also learn the Pocket Watcher 7 money rules. These 7 rules are things that I came up with over my time as being a real financial advisor, a certified financial planner. These are 7 things that I absolutely know that if you follow these rules, you will find financial peace in your life. Now, notice, I did not say that if you follow these rules, it will automatically make you a multi-millionaire. I said you will find financial peace. That means you will no longer live paycheck to paycheck. You will not be buried in credit card debt, and you will actually be building wealth and actually have a retirement for yourself. Here are the 7 Pocket Watcher money rules. Number 1 is budgeting. Number 2, emergency saving. Number 3, debt planning. Number 4, insurance planning. Number 5, tax planning. Number 6, wealth planning. And number 7, estate planning. If you want to learn more about these rules, you can go to the website pocketwatcher.net. Now, if you're sitting right now under the sound of my voice and you do not have a budget, you do not have an active debt payoff plan, well, I got something for you. Go to the same website, pocketwatcher.net. Sign up for the free Pocket Watcher financial planning app. Yes, the Pocket Watcher app is now available for you. You can sign up with your email address, create your own password. It costs you no money, and you can start right now. Start creating your budget, tracking your money, and create your debt payoff plan. Know exactly who you need to pay, how much you need to pay to get out of debt the fastest way possible. And of course, the Pocket Watcher 7 money rules is right there in the app for you. And if you have a personal financial question that you want to run by the Pocket Watcher, once again, you can go to the website, pocketwatcher.net, click the Ask JT button, fill out the form. And when I get time, I'll do the best I can to answer your question. And of course, if there is a celebrity or online influencer who has filed for bankruptcy and you don't know how it happened, you want the Pocket Watcher to break it down for you, make sure you put their name down in the comments of this video. And when I get time, I do the best I can to get you a video. Thanks for watching.
Are you looking for real financial advice? Thornton Financial is here to help. Certified Financial Planner Jayson Thornton specializes in tax and wealth planning. Are you living paycheck to paycheck with no retirement plan? Do you need help with the IRS? Book your free consultation with Thornton Financial today. Budgeting, savings, debt management, and retirement. Even tax debt settlements. Get the advice you need to live your best life. Book your free consultation appointment today. Go to www.thornton-financial.com.